Hello and welcome to Livewire Markets. My name is Anna Dadich. As part of Livewire's reporting season coverage, I'm chatting with the CEO of Netwealth, Matt Heine, about today's results announcement. Welcome, Matt. Thanks for joining me.
Thanks, Anna. Thanks for having me.
So, Matt, congratulations on a solid set of results. What's the one number or metric that investors should focus on from today's results, and what has got you the most excited?
Yeah, it's a great question. So the market is obsessed with net flows, and I totally understand why that might be the case. So at the end of the day, the net flows really is a good indication of the future health of the business and the momentum of the business. But ultimately, what net flows doesn't actually provide is the real health of the underlying business. And where we've been, I think, very successful over many, many years now is actually converting that net flow into profit and ultimately very strong EBITDA margins. So there's actually a range of metrics that we look at, but at the end of the day, it does come down to net profit. And so really pleased that we were able to deliver not only very strong net flows, but also very strong EBITDA margins. Admittedly, this year, for the first time, we have reported an adjusted number, and I think that was important to call out fairly early that all of the numbers that we are talking about today are actually net of any of the First Guardian issues that we went through and experienced last year. But the underlying business, I said, had a fantastic period.
Yeah, great. So what are you most proud of, and what do you think is the business's biggest area for improvement?
Yeah, probably just to pick up maybe on that last point again, and I said this morning at the results call, the last year, or certainly the last 6 months, really was a tale of two cities. And to quote Charles Dickens, it was the best of times and the worst of times. So whilst we were able to deliver incredibly good underlying business results, it was overshadowed, unfortunately, by the collapse of First Guardian and our role in that. Really pleased that we were able ultimately to compensate our clients before Christmas and give them some good news going into the holiday period, but also to start this year with a fresh start and looking forward, all of the hard work that the team put in over the last 6 and 12 months that paid really great dividends, we now think has a really strong foundation to actually look forward and to capitalise on what we think is an incredible opportunity.
Funds under administration continue to grow strongly, but I want to ask you about the net flows. They're the real report card. They remain strong at around 8.2 billion. How should investors interpret that?
As a good result. 8.2 billion, I think over the course of the calendar year, in round figures, we brought in about 28 to 29 billion gross. That is a huge amount of new business to be bringing in, and what's been really pleasing is that we're seeing really good diversification in clients across the country and from different segments. So as a business, we're very focused on affluent advice. So that's your sort of mum and dads looking for more complex advice than they might be able to get from, say, an industry fund, as well as our sort of high net worth and ultra high net worth clients. So the beauty about our business is that we're able to develop core capability that services both of those markets, and then from time to time sort of add or stretch into those segments and build new features and capability depending on sort of, I guess, where the opportunities are. So the net flows were very strong. We believe there's great momentum. Our pipeline remains extremely strong and also very spread again across those segments and against different client types. So whilst it's too early to talk about sort of our views for 27, we certainly think that as per our reiterated forecast that we're going to finish the year very strongly.
Okay, so you added more than 20,000 accounts over the year, which is the first time you've crossed this threshold. What does that say about advisor adoption and client migration trends across the industry?
Yeah, what's quite interesting about our business is that each year we obviously report our net flow number, and in recent times we've been showing the split around where that actually comes from. And what's fascinating to us anyway is that around 90% of our inflow every year actually comes from what we call existing customers. So that's advisors that have been on the platform for more than 12 months, and about 10% therefore coming from brand new customers that have joined or signed up throughout the course of the recent year. Those new advisors that have come on in the last 12 months are the advisors that will start to really produce in years 2 and 3 as they look to transition and consolidate their back books. But the real story here is also just the efficiency that we're starting to see and the organic growth that we're seeing from our current client base. So that is those advisors that have been using the Netwealth platform for many, many years. Are becoming more efficient, they're adopting new technology, they're adopting the technology that we're providing, whether that's managed accounts or better front-end processes, and they're actually therefore able to take on more customers. So as a business, one of our big sort of objectives and goals over the next couple of years is to help advisors and to look at how do we help them from servicing around 100 family groups to 130 to 150 and ultimately one day maybe even 200. So if we can really keep investing in those efficiency tools, whether they're AI or otherwise, that help our current customers become more efficient, they grow and we grow, so it's a win-win for both.
When investors look at results, they naturally focus on the headline numbers, but internally, what's the key metric that you measure or focus on that doesn't get much attention externally, and how do you think you fared this period?
There's plenty of different metrics as you'd expect across the business, and there's slightly different metrics depending on the department or the area. But to be fair, the ones that we talk about to the market are the most important metrics, and things like revenue per account, how our flows are tracking on a daily basis, and certainly I still, it's the first thing that I look at every day is, how are the flows, what's the new business coming in, what's our FUA. They are ultimately key metrics, but equally it's really important to us as well that we're tracking NPS and customer satisfaction as well. So to be successful, we believe in this industry you have to have fantastic technology and leading technology, but you need to be able to couple that with great service. And so when you look at the split of our staffing, when you look at where the investment's going, it really is to deliver on that, which is deliver great tech supported by great service.
Okay, so what tech and product developments for the platform are on the horizon that investors should know about?
Yeah, we were joking about this before. I think I could spend the next half an hour talking about what's coming up. Look, AI is clearly front and centre for pretty much every investor at the moment. It's not a new technology. Yes, there is advancements that have been made in the last 12 to 18 months. We've seen generative AI come from nowhere. We're now seeing agentic AI really changing the way that a lot of people work, and that's certainly the case for Netwealth. We've been investing into AI now for many years, and certainly we're starting to see real benefits of that when it comes to, I guess, our operations. So great efficiency in the back office, streamlining process, document automation, data extraction. That is very much part of our day-to-day sort of cadence and how we're thinking about AI. Equally, we're seeing huge opportunities in the contact centre and the call centre as they're using AI to smart route phone calls or to auto-generate responses to incoming inquiries. And we're going live with our first chatbot in the coming months. And again, we need to make sure we've got checks and balances there, coming back to that service proposition, using AI to actually constantly monitor sentiment on the chatbot so that if someone does sound like they're getting frustrated or looks like it's getting frustrated, they can quickly pass that over or hand over to a real agent to make sure that we can complete that particular case. And externally, we just see huge opportunities for AI, again, driving efficiency for our end customers and the advisors. So delivering better insights, more intelligence, and using what is a very unique and very large data set that the Netwealth platform is able to tap into, which we think provides, again, a real moat to our business now and well into the future.
All right, so you've gained a lot of market share from legacy platforms, but obviously that won't last forever. What's the next opportunity to gain market share after that?
So we talked a bit about this morning. So there's three key parts of the market that we're very excited about. The first is that the platform market is very large. So it currently sits at about 1.2 trillion and is growing organically at around 10%. So our share of that is increasing, and the numbers up to the end of September showed that we yet again increased our market share by about a percentage point. So that is quite meaningful and benefiting from the new business coming into the industry. In round figures, again, give or take, of gross flows, Netwealth and a near competitor of ours receives about 40 or 50% of the gross flows. So that is going to continue to really drive our growth moving forward, as well as that growth that we talked about from our existing customers. Outside of that, though, there's very significant sort of TAM, if you like, that we're tapping into. So there was a lot of press over the last month or so around the first time that industry funds have really seen a shift in competitive net inflow. Again, ourselves have been a huge benefactor of the fact that there is major tailwinds coming from a demographic perspective, which are pushing more and more Australians that have complex advice needs to seek advice, and at which point they will more than likely move from an industry fund across to a retail fund such as Netwealth. And that's really a reflection of the fact that people want all of their financial situation with one provider, whether that's super, non-super, estate planning, trusts, etc. And that's where we're really well set to help and support advisors. So a fantastic opportunity. The super system is looking to grow to about 6 trillion by 2030. That makes it the second largest pension pool globally and a significant opportunity in its own right. Further to that, we've also been talking about our new broking offer. So we're now in market with a soft launch for our new broker and individual HIN offering, which again we think unlocks a TAM of around 600 billion. and which we're extremely focused on and excited to be bringing out to the market and to start talking to brokers about. So plenty to do, lots of new opportunity, and certainly no shortage of people to speak to.
Matt, you've had a really impressive growth story so far. For investors following the story, what should they be paying attention to over the next 12 months?
Thank you. Over the next 12 months, it sounds boring, but more of the same. We're in a fantastic position. We've got lots of new products and features coming out to support our advisors and to drive efficiency. And we would expect to really be capitalising on the opportunities that we've talked about.
Okay, great. Thanks, Matt, for sitting down with us today.
Thanks for having me.
If you enjoyed that C-Suite interview, make sure to give it a like and don't forget to subscribe to our YouTube channel. We release new content every week.